Welcome to the Fintech One-on-One podcast. This is Peter Renton, Chairman and co-founder of Fintech Nexus. I've been doing these shows since 2013, which makes this the longest running one-on-one interview show in all of Fintech. Thank you for joining me on this journey. If you like this podcast, you should check out our sister shows, Pitch It, the Fintech Startups podcast with Todd Anderson, and Fintech Coffee Break with Isabel Castro. Or you can listen to everything we produce by subscribing to the Fintech Nexus podcast channel. Welcome to the podcast, Chris.
Thanks, Peter. Good to be here.
Okay, good to have you. So let's kick it off by giving the listeners a little bit of background about yourself. Tell us sort of your career journey before you got to Resolve.
Sure. In fact, they're very tied. So maybe I'll combine my career journey with just sort of how we started Resolve.
Yep.
The thing that people notice fairly quickly about me is my relationship with Max Levchin, the co-founder of Affirm. He had invested in my last business, which was a pre-order and payments e-commerce platform called Celery. In fact, I remember very clearly we met at the Y Combinator demo day of 2012, the winter batch. And we basically had, at that time, been aware that Max had started his company at the time, which would become Affirm, but it was named prior to that interaction as this very awful name, expedite.cc. Thankfully, they changed the name fairly quickly. And he was looking at the time already to experiment with ways to test the idea of a loan and a checkout. And so we had already built an e-commerce platform with a checkout. And so the interesting way that my relationship with him started first as an angel investor, then quickly thereafter, after he had invested, he had his head of product at Affirm reach out to us and say, hey, look, it's not obvious to us that this is going to work, but we definitely want early adopters. And Chris and his team seem to have a number of consumer-facing merchants that might be open to trying a loan and a checkout. Let's try to strike a product partnership with them. So I remember very distinctly, we ended up agreeing to, since we did a survey of our merchant users at the time, hey, how many of you want to try this idea of growing with offering a split payments installment loan in checkout so that the more expensive items you're offering can, in fact, become more affordable? And most of them said yes. So we ended up becoming the first e-commerce platform to offer Affirm as a payment method. And all the promises of what everyone now knows to be true of buy now, pay later came true very rapidly. We started seeing 20, 30, 40% lift in e-commerce sales fairly quickly. And the aha moment that eventually became Resolve was as the Affirm button was really working for these consumer merchants, a very large portion of them had a business, commercial, or wholesale component to their business, which they said, I love Affirm and what it's doing for that business. Where is the equivalent of Affirm for B2B? Because I would love to use that. So we ended up bookmarking that thought. For the future, we ended up selling our business eventually to Indiegogo, this crowdfunding platform. And in the intervening time when my co-founder and I were thinking about what next venture to build, when we catch up with Max and we're reviewing all the things that we had discussed early days and future, we mentioned the idea of a B2B Affirm. And the answer he immediately came to was, well, that would be an amazing sister spin-out company. We don't have any plans to do anything B2B related for decades or more, given how long the consumer roadmap is for our business. But we can, return you the favor, since what happened is about 2 or 3 dozen merchants ended up using Affirm as a result of our partnership. So he felt like he could send us the equivalent back as we were starting the idea that would become Resolve. And anyway, that's how we got started. My career, to answer your first question, is really around finance, startups, And that background ended up leading to my first entrepreneurial journey, which was that last business, pre-order payments, and this very natural evolution to what now is Resolve. So that's two answers in one.
Right. Okay. So then, like it's like I see it referred to that Resolve was spun out of Affirm. So does that mean that you spent the early days as you were sort of incubating this idea inside Affirm? Like were you kind of working in tandem with some of the Affirm people, or how did it actually work?
Yeah, that's a good question. We did spend time inside the offices at Affirm after we had sold that first business and we were thinking about building the next one. Max has a venture studio which is called hard, valuable, fun. This is his
Right.
philosophy for startups. It has to be hard, it has to be valuable, it has to be fun to build this venture. So that venture studio was co-located inside Affirm's offices.
Mm-hmm.
This spin out effort was a unique situation where it wasn't just a new venture, it was very intimately connected to the Affirm concept. So the the incubation and spin out process was through the startup venture studio HVF. But what we ended up doing was, because of how much business was being referred to us when we launched the entity itself, Affirm participated in the funding of that venture. So that's how we think about the concept of the spin out. So the employees that were working with us as part of that original partnership that we had done at the last company, they were still around. Many of them were really excited to see the effort that they had, the relationships, the business that we had referred to them, then become sort of this reverse benefit to them as they invested in this business that would spin out from Affirm.
Right. So is Max an advisor to your firm, or what's your relationship with him now?
Yeah, he's still closely connected to what we do at Resolve. We definitely catch up with him regularly. Uh, so he is part of the Resolve founding effort, if you will. And so that from that point of view, and from their their ownership stake in Resolve, there's still a very close, I would say, founding and advisory relationship.
Right. Okay. So let's move on to what you guys do exactly. And obviously you've prefaced it a little bit, but how do you explain exactly, what Resolve does?
Yeah. So if you look at the B2B transaction surface area that's possible between a business seller and a business buyer, the majority of the work centers around this invoicing process, right?
Mm-hmm.
So we tend to think of, and the original insight really from the time we spent looking at what the pain points were for business sellers and business buyers, invoices, and in particular net 30, that 30, 60, sometimes 90 days you're waiting to get paid by your own business buyer forces you to be a bank, if you're that seller, to your own
Yep.
buyer, right? So there's at least four different steps that you have to contend with. First is the credit checking step, where you have to underwrite and approve your buyers for a credit limit of some sort. The second step is enrolling that buyer into a net terms program where they have now credit to make purchases from you. The third step would be the collecting the payment, sometimes having to chase payments that are slow or delinquent. And then lastly, the step would be taking those payments, processing them, and in many cases, if there's partial payments, uh, reconciling them into a ledger. So the end-to-end workflow of a business transaction via a net 30 invoice, or doesn't have to be net 30 necessarily, we provide all four of those steps. So a seller, we work with a number of manufacturers, for example. They will just, you can think about what a firm does for a consumer seller. They'll work with the merchant. So we'll work with the business merchant. They will offer net 30 as a payment method, and Resolve will power that by enabling all four steps I just mentioned, so that that's a much more smooth, digital, and seamless process than otherwise if they were trying to handle that ad hoc or manually themselves.
Right. I know it's interesting when you have, because I've been a small business owner my whole career, and you're providing credit to people, and you're not a credit expert. The average small business owner knows nothing about what to look for when offering credit. So what you're saying is you take over that whole process, so they can kind of, you know, you're making, like, are you making underwriting decisions as well, or how does it, like, what are you actually providing?
Yeah, no, exactly right. What we find is many business owners, sales leaders, e-commerce leaders, etc. That there's a established way to think about offering credit as part of a B2B transaction. But for the most part, as you pointed out, even your own experience, these are fairly ad hoc decisions, right? You're sort of sizing up the relationship. You're saying, I trust Tom, who's been buying from me for years now, and he's needing 30 or 45 days to pay back, and he wants $32,000 for that credit. I think he's good for it, or maybe you'll run a Dun and Bradstreet report just to double check. But there's no formal process for the
No.
most part, or it's very, very ad hoc. So yeah, we come in and we have a mechanism by which we can actually perform that credit check on behalf of you and that buyer relationship. And there's a number of things we can get into around what signals, both credit and underwriting wise, that we look at to make sure that that transaction is de-risked, so that there is real data behind that decision as opposed to more of a gut or visceral decision that's based on intuition. But that's just the starting point, right? So in many B2B businesses, they might have a PDF credit application that you have to fax in with credit references. So all of that archaic process we can replace digitally with our process.
Interesting, really interesting. So then, we were chatting before we record about buy now, pay later, and it's been hot, obviously, for the last several years, and remains hot. Consumers love this product, and it hasn't been as hot in the business space. It seems to be changing. But what, maybe you can sort of give your perspective. Obviously, Affirm well, and they're obviously very consumer based. How is BNPL for business different to consumer?
Yeah, this is a question we get quite often. The business version of buy now, pay later, there's obviously a pretty substantial difference because it's based on the invoice transaction, not necessarily and because there's two business entities, right? There's generally a lot more complexity between the process to process an invoice transaction. In fact, the simplest, pithiest way I've heard it put is, if a consumer transaction is like a tweet, then a B2B transaction is more akin to passing a bill through Congress. And so I think, you think about the accounts receivable process where you're offering all the four steps I mentioned, right? Credit check all the way through the ledgering that into your reconciled entries in that accounting ledger. And then all the stuff that has to happen on the buyer side, there's accounts payable controls too, to make sure that they can, in fact, cut the check, write the ACH wire or whatever. And so the thing that's really, really critical when we think about business versus consumer buy now, pay later, if in some ways you can think of Affirm and others, what they're really doing is smoothing the cash flow for the consumer purchase. Yep. In business buy now, pay later, you have to attend to both the workflow and the cash flow. In fact, if you don't do both, you're only addressing half of the equation, right? So there's a number of AR or AP software platforms that argue that they can support this complexity. And there's others that are purely focused on the cash flow, maybe with a lending product or whatnot. But really what we found is critical is marrying the workflow and the cash flow solutions together in an end-to-end platform, right, for B2B payments. That's how you properly solve B2B buy now, pay later, at least from our point of view.
Yeah, that's really, really interesting. I like the way you framed that. So then, are you sort of focused on any particular industries specifically? Are you, maybe you can just give us a little bit of a profile of the typical Resolve customer.
Yeah, sure. So we work with a number of B2B merchants spanning a great number of industries, but I'll give you two examples. One is a bike manufacturer, and during COVID, you can imagine anything outdoor sports related was really taking off. In fact,
Mm-hmm.
there was tons and tons of demand. You've probably seen some news around supply chain
Yep.
snarls that would prevent inventory from arriving on time. So the bike industry in particular was one where we work with this one manufacturer in particular. That's a great example of what we can do. So Turn Bikes, they are an e-bikes manufacturer that works with that sells their inventory to a number of retail bike chains. So the bike chains were desperately looking for more SKUs to have in their showrooms because people were looking to purchase. But because of their growing brand, they're competing with the likes of Specialized Bikes and other larger incumbents. That those incumbents can offer credit terms of reasonable sizes to just about anyone. But Turn
Mm-hmm.
Bikes at the time was only really offering terms to their best, maybe 5% of their business customers.
Hmm.
So when they started working with Resolve, they could expand the base of business customers they could underwrite and offer credit limits to, and the order sizes that they wanted to offer to those, especially those larger inventory purchases, were able to expand. So the classic buy now, pay later concept of once you provide buy now, pay later in your, whether it's checkout or in the business situation that we're in here, traditional sales process, now these retail bike stores can purchase much more inventory much more quickly to supply that demand that they have from their consumers that are showing up to the bike stores to purchase these e-bikes. So that's one example. Another example would be we work with a number of e-commerce or B2B marketplace oriented sellers. So in the medical supply space, there's a group called DocShop Pro that offers medical supplies online to doctors' offices. And they were really looking for a way to streamline their B2B checkout processes. Oftentimes, doctors' offices are doing phone or fax, but wanted to streamline that purchase process. So they plugged in Resolve into their e-commerce workflow and were able to basically drive all of their payments from this more manual. They were testing this e-commerce checkout for net terms and other payments. We were able to come in and digitize that process for them and take a manual marketplace dynamic and make it fully e-commerce oriented. So those are two examples you can see, the benefits from, as I was mentioning before, the cash flow benefits of being able to do better underwriting and offering credit at checkout, and also in streamlining processes that were manual, making them digital.
Right. So interesting. Just to follow up on that, it's like when let's use the Affirm analogy again. You go onto a website and you can see like pay with Affirm, and that's a button. It sounds like what you're talking about with Resolve is not really a button, although there may be a button at some point, but it's really an entire process, because it sounds like you said like there's a sales process that is a lengthy thing. It's not just here, power my button on a website. It's sort of almost like, from what you're saying, is like, help me power my procurement and purchasing process. Is that fair to say?
Yeah, that's very close to how our business sellers and buyers already think about it. But what they're finding, and this is the important bit you're keying in on, is if you only provide a button, which, to be fair, in the beginning, Resolve was really just a net 30 button inside of
Mm-hmm.
Invoice, right? So what we quickly learned inside of Affirm and as we spun out was that is only solving part of the problem,
Right.
because there are banks or financial institutions that can finance invoices for you. That's fine, and that exists today. And in fact, what it often does, if you only do that, is it provides a pretty negative or terrible experience both for the seller and the buyer, because
Mm-hmm.
it's maybe recourse to the seller, or the buyers might wonder, why does the seller need to finance my invoice? Are they in some sort of financial weak position or something? So all of that basically goes away if you now are the billing system that provides a more streamlined process that makes, again, that accounts receivable uh, paper pushing process more akin to like a Congress passing an act, or even the accounts payable process more streamlined. So if you can, we've tended to talk about ourselves as a embedded payment platform, because you can
Right.
embed various components of these more archaic or manual processes into a digital format, or it can even be a manual process, but it's digitized, at least from an operational point of view. And that actually produces the same effect as the buy now, pay later that the consumers know and love from Affirm and others, but in this B2B purchasing context, which tends to be more complex.
Right. Now that's really interesting. So then it seems like underwriting is a really key piece here, because that is what feels like it's high. That's technology and processes and knowledge that's really sought after. So how are you? What's your underwriting engine like? Can you describe that?
Yeah, it's really important that we do this well on behalf of our sellers, right? Because they are looking to us as credit experts and credit partners to make good decisions on behalf of their buyers, who they hold as sacrosanct, really, right? They don't want anything to come in between them and their own customers. So one of the most important things we do is, when we integrate into their workflow, is we can do things like check the existing payment history between the seller and the buyer as a form of credit signal. If, for example, Acme company, as your buyer, has been paying you on time for the last 10 years, very likely they're going to continue paying you on time, right? So, and then interpreting that properly with the number of proprietary models, along with the other credit signals that we'll pick up, there is still, if you're, for example, interacting with a net new buyer that you have not sold to before, a way that we can pull signals from the credit bureaus, from other public sources of information that a credit expert and a credit modeling team that we have in-house has interpreted into a yes or no decision and a credit limit amount that we can surface to you as you're making the decision on whether you want to give net 30 terms, for example, up to $50,000 of a credit limit to that buyer, whether it's an existing or a new one. So, long story short, we've built a credit underwriting engine built off all the, call it, best practices in fintech that are well established, but we're really applying it very, very importantly to the existing relational nature of B2B purchases, right? So not only are B2B purchases heavily workflow oriented, they tend to be built on long-standing relationships. So we take both of those things into account.
So that's what I was interested in. So you might recommend, there might be a customer that they've been doing business with for a while, but unbeknownst to them, they're having some financial difficulty or whatever. But and suddenly you're coming in and saying, hang on, this person doesn't deserve a $50,000 credit limit. We think it should only be 10. Or and is that something? Obviously, they can override it, right? They can say, "Screw you! I want this relationship is so important. I'm going to keep doing what we're doing." I mean, what's that sort of? Can you describe that sort of interplay with knowledge, relationship knowledge that they have that you obviously it's harder to sort of automate that, right?
Yeah, no, that's right. In fact, this is where there's a really deep partnership between the merchant sellers and Resolve platform, or the folks that are powering or that relationship on their behalf. So what they'll see is our platform can get insights they may not be able to themselves from a data point of view, and they may have some relationship insight or preference to offer more credit limit than, say, we might. That happens on occasion. But what we typically find is that they'll see the data and be like, you guys can see something I can't. I will tend to be more cautious if I see the Resolve decision suggesting something less than I normally would be. And they use it to check their intuition. In the case where they're, for example, like you said, insisting that they do more, they will oftentimes take that transaction and complete it. And there's ways for us to support, even if we've said 50K transaction, they want to do a 60K, 60 or larger K invoice, they can default to their gut, if you will. But that's generally more rare. But the main point is there's often both a pairing of the data and that relationship insight. And often if it becomes larger size, sometimes we'll see transactions in the hundreds of thousands of dollars, or in some cases even millions. There's a conversation that happens between their team and ours to make sure that that relationship is preserved, the transaction happens, and it's done as in as risk smart way as possible.
Right, right. So then, are you like more of a SaaS platform then? I mean, are you taking a percentage of each transaction, kind of like the traditional BNPL? What's the sort of your business model?
Yeah, so do we are a workflow platform in addition to a payments platform. So there
Hmm.
is a way that we will work with our customers where they're paying us a monthly platform fee to use all the tools that supply that end-to-end workflow that I just described earlier. There also is a or transaction fee, which basically get at the idea of if you're offering net 30 or net 60, there's a cost associated with that, just like you would be paying a fee to a credit card processor, for example. So there's both. We monetize through a platform fee and a transaction
Right.
fee.
So then, are your customers like one of the reasons why BNPL is so popular for consumers is the merchants love it because suddenly they offer this and they have a 30% bump in revenue, and so that's a real selling point for the merchants for BNPL. Is there a similar thing in play for Resolve customers, or how would you approach that?
On the buyer side, is that what you're asking?
Yeah,
How do they
yeah,
think
like
about the benefit? Yeah, that's right. They definitely get the so in many cases, what we're finding is either the merchant doesn't given hasn't offered terms before, so if they get terms at all, that's a net new benefit. Or if they have, sometimes it's net 15 or something somewhat short, or net 30 is the standard. And with Resolve, they can offer something like a net 60. So extra time to pay is always a net benefit to the buyer. The other
mhm.
is if it's been fairly manual in the past where they have to, you know, as I mentioned before, pay through an ACH or wire or credit card through a more delayed process where it might take weeks to get a credit decision, or they have to work with one individual on an accounts receivable team that's subscale. They now have a number of digital payment options that's available to them through this digital process we've enabled. So the payment options become much more seamless, and they tend to be able to be longer than they were before. And as I mentioned, oftentimes they can pay more because the credit limits tend to be higher as well. So all those and more tend to be buyer benefits.
And then what like a lot of companies will offer credit cards, right? So how do you interface with sort of the payments processing side of things, or is this really a totally separate kind of funnel for people for your clients when they're putting on their checkout?
Yeah, no, we also accept if you want to pay off your invoice with a credit card, you can absolutely do that.
Okay.
I'm not sure if you're getting at the idea of offering like a private label credit card or procurement card, but
No,
that's
I was
not
just
what
thinking.
we.
I was just thinking about like a merchant, one of your customers who's already offers credit cards. They do some
Mm,
terms as well, but are you like now they have Resolve to really manage their terms, but they still have their credit cards, maybe for smaller transactions or what have you. But like, is
mm.
there an interface there?
There is. Yeah. In fact, the way they think about it is, why don't we just process all because they tend to like the interface we provided, and invoicing is the more primary flow than say a credit card swipe or a credit card button on an invoice, then we will generally speaking offer credit card processing as part of the interface,
Okay.
as part of their invoicing experience now with Resolve in this total B2B transaction uh, support, right? So yeah, credit cards at the end of the 30 days, if you want to make a credit card payment, you can also do so.
Right. Gotcha. Okay. So moving on here, I want to get your sense on how you're approaching the current economic climate. There's just in the last couple of weeks we've seen a lot more talk about recession. Interest rates are going to keep rising. Um, how are you approaching that? Particularly, I'm interested in the underwriting side of things. Are you changing anything given where we are in the economic cycle?
Yeah, and as I mentioned before, underwriting is one component of what we do, but maybe only a fraction of it. But there
Okay.
is a sense that for the merchants that and their buyers, everyone's aware of the risks of a recessionary environment. So they may prefer to be more risk off or risk on. And our credit decisioning engine allows them to be a lot more tailored in their approach. right? So they can, in some ways, set what they prefer, right? If they want to be more cautious and grow slower because they're nervous about repayment rates of their buyers that they work with, they can do so when we enable that for them. For our particular case, right, the signals and the data remain the same, and the interpretive stance around how much credit decisioning, whether we give approvals higher or lower, those models have persisted over time. We have reams and reams of data from our own experience and past that suggest what are good cutoffs for certain approvals or credit limits.
Right.
So I would say those hold true, but the attitude of our merchants, that can vary. And we are seeing, I would say, the merchants and the buyers that are a bit more nervous about it, they have on balance decided to be a bit more cautious in this environment, and it makes sense.
Yeah,
from our point of view.
That makes sense. So when I was researching you guys, I came across an article that you wrote fairly recently. You're talking about buyer journeys, and you sort of, I can see that this is a really big piece about what you do at Resolve. So you were talking about like transforming buyer journeys. What is where are B2B companies falling short here?
Yeah, no, I think maybe the biggest secret we have, and maybe it's not so secretive if you're running your own B2B business, is the magic really is in the relationship. But the problem is most people assume if it's a relationship, it's manual and unscalable. But what we're finding is with increasingly more digital expectations from buyers, including B2B buyers, you can in fact scale this relationship dynamic of a B2B purchase if you do it the right way. And in our case, our orientation is how do you properly scale the very important relationships in B2B purchasing digitally? And the way we've figured out how to do so is you really have to not, the answer is automation is not the only answer. Automation is part of the answer. And you have to couple human insights and human relationship components to make sure that B2B transactions scale. So to be super specific, as we started to talk about in the that credit limit example we went through, what we found is, right, if you have either an e-commerce checkout or if you have a B2B marketplace and you want to sight unseen underwrite or offer credit limits to your business buyers, that can work up to a certain point, and you can use credit algorithms to decide sight unseen. But when it comes to larger purchases, especially ones that are recurring, one of our core missions or values is growing transactions into relationships, right? So you might be able to do one-off purchases in B2B akin to how it's done in consumer, right? You buy a Casper mattress and then you're done for a few years. But we find in B2B, it's really important to nurture transactions, especially net terms transactions where there's a trust component or credit component built in. And then once the relationship is established with a credit or net terms first transaction, the opportunity to enhance or grow that relationship comes not only from the net terms platform that we provide and the payments, but you basically leaning into that relationship that started digitally and can become digital and human, if you will, right? So that to us is the idea of transforming, right? The kind of obvious digital transformation, but in some ways the relational enhancement that comes from it.
Right. So then how do you interface with, with the accounting platforms like the QuickBooks and NetSuites of the world?
So we integrate across platforms, and the number of the ones you mentioned we integrate with. That integration piece is incredibly important for both the underwriting and data connection, as I mentioned. And oftentimes these sellers and their buyers think of those platforms as the central nervous system for their business. So it's really critical that we integrate with those in addition to what you would expect, the e-commerce platforms and the other selling platforms that are popular within B2B.
Okay. So then can you give us a sense of the scale you guys are at today?
Yeah, sure. So I'll start with something that is maybe a truism in B2B. B2B market is massively larger than the consumer market from a total addressable market or TAM point of view. So we've already been able to process and issue we've issued billions of dollars of purchasing credit to tens of thousands of business buyers. We're growing significantly, especially despite or maybe partly because of the environment macro we're in. There's certainly a lot of demand for what we do. There's obviously risk associated with it, so we have to be very smart and judicious about that. But yeah, the thing we talk to Max about and we joke about is we are, their sister spin-out company. So we might be the little sister today, but our ambition is to be the little sister that grows up to tell their older brother what to do.
Okay, well let's end it there. Let's maybe what's your vision and how are you going to do that?
Yeah, so I think where we see payments going, buy now, pay later going in B2B is really around this embedded payment. So we ultimately want to be the embedded B2B payments platform that, as I mentioned earlier, that allows or helps grow these transactions into relationships, because that's really, I think, at the core of what a B2B transaction is. It is a relationship. It's a trust-based transaction. And we want to make those B2B transactions as seamless as they are in consumer. And we think the future of payments in B2B will be more and more this way, more and more embedded, more and more trusted, more and more relational.
Mm-hmm. Okay, well, Chris, it's really been fascinating learning more about Resolve. Thank you so much for coming on the show today.
Thank you, Peter. Good to be with you.
Okay, see ya.